Hey guys, welcome back to my channel. Today I am going to be talking about reverse mortgages. I'm Kelli Gubrud with Realty One Group, and this is
I'm Chuck Biggs. I'm with Epic Lending. I've been working in the lending field for 25 plus years.
awesome. So we're going to get right into it today. Like and subscribe my channel if you haven't yet, because we're going to be bringing a lot more information your way in February on FHA mortgages. But today, without further ado, we're going to be talking about the reverse mortgage. So question number one was, what is the reverse mortgage, Chuck, and how does it work?
Well, reverse mortgage, is kind of like its name. It's the opposite of a forward mortgage, which is what we typically think about, where you make payments each month, etc. With a reverse mortgage, basically what's happening here is you are not going to make a payment. Okay, this can be used for a refinance or for purchasing a home as well.
Okay. What would the eligibility requirements be for obtaining a reverse mortgage?
Well, on a reverse mortgage, you do need to be 62 years of age or older. Kind of works in a way like life insurance, in the sense that the older you are, the more percentage of the purchase price you would be eligible to receive in a loan.
Okay. And when you have different types of reverse mortgages available, which one would be best for certain situations, would you say?
Well, typically HECM does most of these types of loans. There are other options. For example, there's some that are more proprietary, where they're like an investor would use.
Okay.
Or we use private investors for, where they'll do more of the larger loans that maybe HECM, would hit their maximum loan size. Most people will fit in that HECM range.
Okay.
But if it's more of a jumbo type loan or purchase price, they're able to go higher what HECM would typically do.
And would you be able to explain just a little bit about what the difference between a normal conforming and a jumbo would be? Like, would somebody have an exorbitant amount of equity in their home if they hit that jumbo?
Yes. So once you reach, it differs based on markets, but typically right now, conventional ends at about $766,000 in loan amount. Okay. So not purchase price, loan amount. Once you exceed that, you do enter into the realm of jumbo.
Okay, perfect. So what are the costs that would be associated with the reverse mortgage, as far as origination fees, closing costs, and ongoing expenses? Are they different from a regular mortgage?
There's a few differences. Typically, you're going to have the same title, escrow fees, lender fees that you would have with any other loan.
Okay.
But HECM loans or reverse mortgages tend to be a little more expensive up front. Okay. In the fact that when you there's no payments being made, so they have to collect everything up front. A HECM reverse mortgage would have mortgage insurance. Okay. Okay. But because you're not making a monthly payment, you have to pay it all up front. So it's paid up front instead of being paid monthly, like a lot of forward mortgages, even though that is available on them too.
Okay, perfect. And then how will the funds be distributed, and what are the options for receiving that money? What does that look like?
Okay, so you have options for distribution. Now on a purchase, it's a little bit different in the sense that they're going to put whatever the difference is of the loan amount in debt, and it would be one disbursement. Okay. If they were refinancing a reverse mortgage, okay, their current home, depending on how much equity is left once it's done, you can decide whether you want to take monthly distributions, okay, where we set up where they pay you a set amount each month. You can set it up as a line of credit where you only draw on it as needed. Okay. Okay. Or you could just take a lump sum.
Okay. Well, that's really nice to know, because I think there's a lot of misinformation out there that people grab a hold of, thinking that this is some sort of Ponzi scheme. Yes. When really it's just that they didn't set it up in a way that would best benefit where they were at in life. Yes. At that point.
Yes.
Yeah.
And what's to make people feel more comfortable, a HECM loan is basically overseen by HUD. Okay. So you have, it's very, very much government regulated. These loans require counseling before you can even move forward on one. Okay. So you have a third party that you can answer and ask questions, and they have no vested interest in whether this thing closes or not. So they're there just to answer questions and give you information.
And that's there to protect the consumer.
Yes.
From making poor choices with the equity in their home.
Yes, as well. And you are allowed to bring your family members into that consultation as well.
Great. That was one of my questions, because I wanted to find out, a little bit more about what the implications are with the heirs of an estate or the heirs of,
Yes.
property. So,
And that's a common question because people aren't real knowledgeable about the program, and families very concerned. What's going to happen? How does this work? And this helps everybody get a more comfortable feel of the program so that they understand it. Because to answer that question where you were going on there is what does happen? What does happen? So you can live in this home as long as you so desire. Once you leave the home, for example, let's say you want to move somewhere else, you do have to either refinance and put it in another loan or sell the home like you would any other home. So in the event someone passes away as well, the lender doesn't take the home. Okay, it's just like if you had a forward mortgage on it. And what you would do is you have time to sell that home, list it. At the time of sale, they would pay off whatever that lien amount is left. And then the money would be dispersed to the estate.
The remaining amount
Yes.
that was left would be dispersed. Okay.
Yes.
Yeah, and I think a lot of people have kind of a misconception that once you do a reverse mortgage, there won't be anything left.
You are correct. And that's why when these loans are done, they're not lending to the full value of the home. There's a lot of equity left. Typically, it's around that 50% number. The older you are, you can get a little bit more, but rarely will you see that it will exceed 60% of the value of that home. So yes, interest is accruing and the balance will grow. But at the same time, if you look at, valuations as what they trend, if it's even conservatively 3 to 4%, the home is growing in value as well. So as the balance grows, so does the value of the home. And that's the idea. But if anything happened that the market crash or whatever, they can never lose their home while they're still living in it. Okay. Even if it went upside down where the lender now has a bigger debt, they are owed more than the home is worth, they can never go after the estate for that. They would take whatever the sale price is and they would walk away.
Okay. So essentially, if you do a reverse mortgage, as long as you're living in that property, you can stay in there even past the duration of the equity that you've pulled out.
That is correct. There is no term limit on that.
Perfect.
So, and that's where it may differ from a forward mortgage. Eventually, if you're making payments and it was paid off, it would end, right? A reverse mortgage really never ends until you decide to move or you pass away.
Okay. And does your house have to be paid off in full for you to do a reverse mortgage?
No, you can do a reverse mortgage. As long as you have the equity, you can do a refinance. They will pay off the current mortgage.
Okay. And
then advance you or set up disbursements or set up a line of credit based on what's equity is still available based on the loan size they qualify for.
Okay, awesome. So if you do the reverse mortgage, you still have to pay the payment on your original mortgage, but you will be getting that disbursement, or if you get those monthly disbursements, that could offset some of the cost for you.
Well, actually, there would be no payments on a reverse mortgage.
Oh, okay.
None.
There would be no
so that's the whole idea of it, is that you have no payments. So for someone, for many reasons, it creates, we have more liquid income or have more liquidity available to you for other expenditures, living life, trips, etc., not depleting your current retirement funds. So some people think, oh, well, I don't need it. I have so much money in the bank. Well, yes, but then you're going to be pulling that money out to live on. If you want to not take as much out of that and not deplete that as fast, you can use your home instead, where you're not making any payments. That's less money you're going to be pulling out of that.
And you have a place to live.
Yes.
That's really great.
So your only responsibility really on that home will be taxes, insurance, and if there's an HOA. But even then, there is an option, it's called a LISA, where they actually collect. That means you'd get less money, or if you were buying, you would have to come up with more down. But they would take a decent sized portion and they're going to put it in an account, and they will pay your taxes and they will pay your HOA.
So it's just like an
and
impound.
Your insurance. Yeah, it's like an impound. We don't advise that unless it's required. So typically, most clients don't go that route, but sometimes if you haven't done a good job of paying your taxes or HOA on time, they will force you to set one of those up.
Yeah, and maybe even just as precautionary measure, that would be a good thing for somebody who may not have a helper or somebody to
Right.
work on their finances with them, just to
Yes.
have it all.
It could be
done.
done. Yes.
Okay.
That's correct.
How will the reverse mortgage affect your current and future financial situation with taxes, benefits, and retirement planning?
Well, the beauty of it is, and we kind of touched on it a little bit before, is that you're now not depleting your current assets
Yeah.
nearly as fast. Okay,
Yeah.
so it's going to allow that to grow at a faster rate of return,
Yes.
right? The more money you have in there, the more money it will earn
Yep.
and grow. So you have that going. Actually, that growing, even though your interest on your home balance is growing, you have an offset by what's happening there, plus the equity in your home. It's also, or the value of your home, in most cases, going up as well. So there's no really risk to your estate or anything. It's like we said, when you do decide to move out or you pass on, the home will be sold, the balance will be wiped out. Any money that's left over or equity that's left over will be given to the
heirs.
The heirs.
Okay, cool. That's great. So what happens if I outlive the loan or I want to move? What happens in that situation?
So if you outlive the loan, you can't really outlive it. If
Okay.
you lived 120 years old,
Boom, it's done.
and you've been in there for 40 years without making any payments,
Yeah.
you can do that.
Okay.
There is nothing that can push you out of that home. The only thing that could is if you didn't pay your taxes for some reason,
Okay.
and that can happen on any mortgage. So there's nothing special there. You have to pay your property taxes, or eventually the state can, come back after you. But you do not have to worry about that. Now, if you do decide to move, let's say things will happen as you get older. Maybe the home's just too much now, right?
Yeah.
I need to move in with my son. I need to move with my daughter. I need to go into a home. At that time, you will just put it on the market. You will sell it. You will then, the balance will be paid off. And then whatever remaining money is there, that you will use that for, maybe moving into the home or something.
Okay. Yeah. And again, there are some potential risks to doing the reverse mortgage. Can you tell us about some of the risks and potential downsides of a reverse mortgage?
I guess if there's any downsides, the fees are a little bit more when you first get it.
Okay.
Okay, you consider that a downside. You do have a balance that's growing rather than going down. Like a typical mortgage, you're making payments every month, so your balance is dropping. Okay, on a reverse mortgage, you're not making any payments, so interest just accrues and the balance will grow.
Right.
So that would be a negative when you consider it that way. Now, a lot of times people don't realize that. Let's say you do have a decent income source, you are allowed to make payments on your reverse mortgage if you want to.
Okay.
You could pay anything. So, for example, if you said, you know what, I want to keep this much equity in my home, so I'm going to pay a little bit towards that balance every so often, so that way I drop the amount of interest on there. That is allowed.
Okay.
If someone wanted to go that route.
Yeah. So there's no quote unquote payment penalty or anything for
no
doing those
payment penalty.
Okay.
Nope, you can pay this off at any time, sell it at any time. You're not required to, keep this loan any length of time.
Okay. And then what alternatives to a reverse mortgage should people consider? And are there any questions that you feel would be like the most important questions to ask the person or the qualified individual that you're working with?
Well, yeah, we want to make sure that you can still qualify, and the lender would anyway, or the investor, that you still could qualify to make those tax payments, pay those HOAs, put food on the table. We don't want to put someone in this home and they still can't afford to survive.
To live, yeah.
Right. We want to make sure when these came out originally years and years ago, they really had no criteria. Basically, if you were alive and your driver's license showed that age that you required, you could get the loan. But then people fell into trouble in that they just didn't even have enough income for the property taxes, for the insurance, and that could cause them to lose the home. So in those situations, it is probably better that they sell the home and either move in with family or something like that. But they would have to do that anyway if they kept a forward mortgage, because that would even be worse.
Yeah. So it would probably be a good idea for a lot of these people to seek out a financial planner or somebody to show them exactly what their hard costs are in addition to their tax provider and get that set up.
Yeah, and one of the things we do our due diligence on these. So we're going to look at what your income is. So if you're making Social Security, do you have disbursements maybe from an IRA or maybe from your own investments that you're going to take a certain amount of disbursement each month? We'll count that as income. As long as it shows that, hey, you have enough, you're going to be approved. If we show that there's not enough income there that you're not going to be helping yourself by doing this, we're not going to do the loan. We're going to let you know, hey, this is not going to help you like you thought it would. You just don't have enough income there to even cover the basic expenses.
Are there any concerns at all with reverse mortgages in the sense that there might be predatory lenders out there? Is that an issue at all?
Well, back in the day, it probably could have happened or did happen. Right now, the fees are regulated.
Okay.
You have to go through the counseling that we were talking about before.
Yeah, that's great.
You have to. Everything is regulated by the government on these very strictly, actually. So they're really going to look at it very closely. You know, the last thing you want to have happen is somebody lose their home. So we really look at that close, and all the fees are very regulated.
Great. So. And last but not least, I think a lot of people also want to know what type of person would the reverse mortgage be most beneficial for?
Okay, so there's kind of a misnomer, if I'm saying the word properly, that, oh, this is for people that just don't have any money and, you know, they're barely getting by. And yes, it is for them. It will help their situation. I mean, if you've got mom and dad living in their house and they're on fixed income, and, you know, they're just barely being able to put food on the table. Yes, this would, and I've done many of them this way, where all of a sudden now, instead of making $1,500 a month payments or more, that's $1,500 they can live off, and it can make the remaining years of their life much more enjoyable.
Yes.
But it's also for someone that has plenty of money, because again, how fast do you want to deplete your assets?
Yes.
Okay. So if you have IRAs, 401ks, stock savings, whatever, how fast do you want to deplete those? Do you really want to be pulling money out of that to make your mortgage payments, or pay cash?
Yeah.
Because once you pay cash, yes, you have that equity in that home, but you're going to have to sell it to get it back. A lot of people will look at it, or when they're talking to their financial advisor, say, do you really want to take all this money out, this $300,000, this $400,000 out of one of your investment accounts to buy this home in cash? Because now you have a very non-liquid asset, right? You can't pull that back out without selling the home.
Right.
So why would you want to deplete that? So for example, Europe is an example where they do reverse mortgages as well.
Yeah.
The higher percentage of people that do them are not the people that are down and out. It's the folks that have money.
Yes.
Because the way they have always looked at it there is it's asset preservation.
Yes. Yes, and I was thinking too, this might be beneficial for somebody that has a younger daughter or son that would come in and live in the home with them, and that would free up their home to be rental property. They could care for their mother and father in their own home.
Yes.
And that could be another savings for, you know, the family member that is probably being burdened the most with care, if you will.
Yeah, so if you did something like that, you know, one thing you do have to remember is it is always based. So for example, if it's a husband and wife that are doing this, if let's pretend me and you were married and we're in this home, the loan is going to be based on whoever is the youngest person. Okay. So that's the age requirement. Okay. If you have someone coming in and live in your house like your daughter, you just wouldn't want them on the mortgage. Right. They couldn't be on the mortgage because the age wouldn't qualify. And they have to understand that the day comes, mom and dad aren't around, they can't continue to live in that home without refinancing. Now they can refinance it and take it over. But if they would stay in there and say, hey, no mortgage payments, no rent, I like this gig, that would be in violation of that contract, and that could cause, there could be some issues for them. Yeah, that's clever. But I could see somebody doing that for sure. I'm sure it's happened. I bet you it has many times, because sometimes I'll go on the multiple listing service, I'll see these properties that are now court approved, and you call the agent and it's a reverse mortgage, and they're trying to get court approval on the estate and so on, and someone's living in there
and they did a reverse mortgage. So
Yeah.
you run into that.
And what that's good about the reverse mortgage, they give you plenty of time to sell that home.
Yes.
Okay. They're not going to be, I would say they're easier to work with when it comes to that time of sale than they are on a forward one where, no payments aren't being made, right? So it's delinquent.
Yeah.
So delinquent. Now the reality is someone's got to be making those payments even if they're gone. And they may give you more time. If you ask for it, say, hey, we're doing this, but if
Yes.
you don't, they could file for foreclosure, go 60, 90, 120
Yes.
days behind and
They
no
don't
one's
get their money.
communicating, they could foreclose. Well, you're not going to really see that on a reverse unless you're not, you do want to communicate immediately. Say, hey, mom's died. We're putting the house on the market. They'll probably ask you to, all right, just get us the listing agreement, etc. We'll make a note of it and we'll work with you through this process.
This could also potentially be a niche area for realtors. I could see this being a niche area for realtors to really go into some of these communities and work with these folks on how much they really do have to live off of, and if they're really stressed and the only asset that they truly have is their home. This could be very beneficial to these people. But the fear-based mentality that's out there around the reverse mortgage, I have found it is just a lot of it comes from that 08, 07 predatory lending time frame. And I really wanted people to just understand this better and be able to wrap their head around it.
There's so much misinformation about it. You get a lot of family members that will obviously want to have their 2 cents on it. They really don't know anything about it. And so people get very confused. And so, the knowledge about the program is not good. Right. And that goes from a lot of loan officers, agents as well. They're just not as familiar with the product. And when you really get to learn it and know it, I personally would take one. And probably will down the road. Yeah. Because to me, I don't want to be making mortgage payments, regardless of how much money I have in the bank, because that's an asset. I'll use the asset to pay for itself. And that way I can use my money for other things. So I'm a big believer in the program.
Yeah, and the more we've spoken about it, the more I'm kind of reading and doing more research on the reverse mortgage. One of the things I was going to ask, so if somebody was going to do a reverse mortgage, and let's say they had $400,000 or $500,000 worth of equity in their home, do you have a roundabout number about what it would cost them in closing costs just to do that loan?
Well, okay, it depends. So I would say at around that 10 to 15 number.
Okay.
Now the thing is, if you're refinancing it, they're going to take it out of the equity. You're really not going to. It's not money out of pocket.
Yes.
Okay. So they're going to take it out of whatever they're advancing you.
Yeah.
Or if it's a line of credit, it'll just be rolled into the loan. That'll be your new balance. So you really don't have to really come anything out of pocket. Maybe the appraisal at the most you'll pay out of pocket.
Okay. And they do a standard appraisal, I assume?
Yes, standard appraisal. Yep.
Okay.
Yep.
Okay. And so it's pretty much just like a normal sale in the sense that there's all of the normal fees. The only thing that's different would be title and escrow?
Title and escrow will be about the same.
Would it? Okay.
What the main fee that is different is that upfront mortgage insurance that you have to pay on a HECM loan. Okay. So because you're not making monthly payments, you're just paying it. It's kind of like just paying it all up front.
Okay.
Okay. And that can drive the fees up a little bit.
Okay.
Lender fees on those, or investor fees, are a little bit higher. That's why I'm saying more like 10 to 15. But it depends on how the loan amount is, value of the home, etc. So
okay. Yeah, that's really great. Those were, just some of the questions that I had after watching some of the YouTube videos, because I think sometimes people are really good at explaining certain processes about the reverse mortgage, but not some of the questions that people have or the fear that's behind the reverse mortgage.
And there can be confusion too. For example, on a HECM, you're really not allowed to charge an origination. Well, you can charge an origination fee, but actually it'll show this fee, but then you're going to see HUD give a credit for the exact same amount. So it actually can't. So the closing costs look higher, but some of them are already being paid by HUD.
By HUD. Okay.
Yes.
Yeah, that's really great. I wondered about that too. And I was going to ask you, do certain lenders disclose the origination fee up front and others will have it buried in the rate? Is it somewhat similar to
typically that? The way reverse works, yeah, you can charge your origination. It does have to be disclosed.
Okay.
But a lot of times, but there's a cap on what you can charge.
Okay.
HUD pays the investor, for doing the loan anyway.
Okay.
So in most cases, you're not really going to be charging a ton of originations for it. Maybe
Yeah.
1.5%, pretty much where it's at. And then as a client, you can choose whether you want to have a fixed rate, whether you want to have a variable rate. I can tell you that most are variable. And you think, oh, I'm scared of variable. You're not making the payment, right? So you don't have to really worry about it too much. But also with a variable, you get a lower starting interest rate for sure.
Okay.
So if you do a fixed, what happens is then they will cap the loan amount that you can do.
Okay.
And typically on lines of credit, you're usually always variable if you're doing a line of credit. It'll make more money be available to you on a variable.
On a variable. Yeah, because potentially they would earn a little bit more.
Yeah, and the variables can be where they adjust annually, or you can do the monthly one.
Okay.
As well.
Yeah, that's really great to know. And then are there any things that or any questions that you get frequently about reverse mortgage that we haven't covered today?
Well, I think you did a pretty good job with your questions here today on it.
Good.
I mean, those are the main things. I would say that probably the top question you get is, what happens to the home when I die?
Okay.
Is the bank going to take my home when I leave? Does the bank own my home? No,
yes.
You still own your home just like any other mortgage.
Yes.
They are just a lien holder.
They're the lien holder. Yeah. Yep.
So
that really does clear up a lot. I think one thing that I'm noticing in our industry is a lot of people are really starting to charge forward with taking some control over their finances.
Yes.
And the first step is usually that they purchase a house. The second step is that they go back and go, oh my gosh, I really shouldn't be spending this much money. What about retirement? And they get to my age, and I'm really speaking to the people in their mid 40s, early 50s that maybe didn't plan to set aside enough for retirement, or small business owners that have diversified accounts but are a little worried about how things are going to come together in the next 20 years.
And they can use this as a planning tool.
Yes.
So, and my advice to you out there, if you're listening to this and thinking, gee, I'm 50 years old, I want to retire at 65, or I want to retire at 68.
Yeah.
Okay. Well, are you planning on staying in that house? Are you going to buy another house? If you do that, just try to, the number in your head, like I was saying, the age is very important. So at 62, you're not going to be able to get a loan as big as 72.
Yep.
Okay. But if you have 50% equity in your home by the time you decide to do this, as a rule, you're going to qualify with that without having to come out of any pocket money. Okay.
Yeah.
At 62, you're going to be more at, you might be able to only get a loan up to 40-45% of the value of that home. Okay. Because remember, you're going to live at 62. The life expectancy now, if you're to that age, you're going to be well into your 70s, and for women, well into their 80s before the average person would then pass on once you've made it to that age. So you're going to be in there quite a long time. So they got to leave room for this interest to grow, even though the house is going to go too.
Sure.
I mean, 20 years, we can look back now, homes what were the value of the home they were in now 20 years ago? What did someone pay for it?
Yeah.
So based on just normal trends, you could see what will the home be worth then. So it's going to help. It's going to keep pace or possibly outrun. You could see, you can't predict everything.
Right.
But as a rule, what you're going to find is that the house is going to grow in value over time. You might have a year or two where it goes down. So that's going to help offset that interest growth.
Yeah, that makes a lot of sense. And I think too, is there any correlation between seeing more couples do this versus single people? Do single people benefit from this because they had less of an opportunity to earn income as a household?
Well, yes, and I've done several of these, and sometimes it is single, sometimes they're married. Women tend to outlive their husbands.
Yeah.
So a lot of times, the last one I just did actually she was single, widowed, and she was working a part-time job still. Yeah. She was just barely getting by, and this really helped her. I mean, you get the relief in her face when it closed. that all of a sudden now, you know, she's pinching pennies every week. She can go out,
Oh,
have breakfast with her friends, go out to
yes.
dinner a couple times, you know, a month instead of, you know, I can't do anything. I'm tied to my house. That's no
Yes.
way to live, you know, your final years of your life.
Yeah,
So,
especially when you've worked this hard to purchase a house, and for what? I
yes.
mean, this could be one of the potentially very beneficial things for
Yeah.
people, and that's a great story.
So,
Just those are the stories that I hear, and a lot of them are from single people, so or widowers.
yeah.
That you know, when the husband passes on, the wife didn't have an occupation,
Yeah.
and now living very very tight.
So, and as a couple, let's say they were both even getting Social Security,
Mhm.
well, what happens is you have to choose. The living person has to choose. Do you want to take his, or you want to keep your own?
Mhm.
But you're losing somebody's.
Yeah, you are. So
So,
you're living off less.
so you're living
Mhm.
off less.
Yeah. Well, this is great. I just absolutely love this. In February, I know we're going to talk about FHA mortgages next.
Yes.
And those have an upfront mortgage premium too. So that's going to be fun to discuss and who that would greatly benefit
Yes.
in this market in
Yes.
2024, in the next months to come, and what we saw in 2023 and the people that we can help with FHA. So
I look
thank
forward
you.
to it. That's
Yeah.
it's a great product, and it does help a lot of people. And there's some improvements that are on it now versus
Yes.
a couple years ago. We'll talk about that.
For sure. So we'll see you guys back in February with Chuck Biggs when we talk about FHA. And I hope you learned a lot today about reverse mortgages. And thanks for joining today. I appreciate you guys, and we'll see you back on Life in Phoenix.
Thank you.